All right. Well, if you want to start investing this year, but you're unsure where and how to get your money's worth, our next guest may be able to help you out. Joining us now with tips on where to invest in 2022 is Brent Wilsey, President and CEO of Wilsey Asset Management. Good to see you, Brent. Good morning.
Good morning, Jason. How you doing?
I'm doing great, thank you. I was looking over these notes here, and I was wondering, given the inflation, the rising inflation, should we be thinking any differently about how we invest?
Oh, most definitely. I do want to warn people. We've warned our clients not to expect the same type of returns they got in 2021. 2022 is going to be a whole different year. I think there's going to be a lot more volatility. There's going to be some scary times. So you got to prepare yourself for a different year. And you also have to look at, whenever you're building a portfolio and investing, what are the headwinds you're going to run into? And the big one is rising interest rates. We've heard that the Federal Reserve has talked about raising interest rates 3 times, maybe 4 times next year. One thing people are not focused on, that they don't understand, is the reduction in the Fed balance sheet. It's now about $9 trillion. They're going to stop buying treasuries and mortgage-backed securities, which means there's not going to be as much demand in that area, which on the long end of the interest rate curve should rise those rates. So not just the short term, but the long end as well. You bring up inflation. Inflation is going to be a factor. You got to be careful that you're not going to invest in companies or mutual funds and have businesses that are going to be hurt by inflation. You want to find companies that can handle the inflation and weather the storm and go up with inflation. We've talked about the shipping here on the channel before, and I think by mid-year, that could be something the rearview mirror won't be such a problem, which will help a lot of businesses as we ease that shipping crunch, which will also, by the way, help inflation. 2 things that are the wild cards, I'll call them. One is government regulation. We've heard the government kind of go after technology companies. We've heard rattlings about them going after financial companies. We just don't know what's going to come out from Washington this year. That could be something that could hurt both technology companies and financial companies. You can't really plan for it, but you want to know it's out there. And the other thing, too, I don't think it's going to happen this year. That doesn't seem likely, but it's a possibility. Rising taxes from Washington, where they raise taxes, eliminate or reduce probably the capital gains taxes. So these are all the things I deal with day in and day out, always kind of sleeping at night saying, is that going to happen tomorrow? You got to be prepared for the unknown many times.
How about pharmaceutical companies, specifically those that are involved with the COVID situation?
Got to be careful here, because there's we like pharmaceutical companies, but be careful what you pay for pharmaceutical companies or any companies, because what can happen is that you pay too much for them. And we have seen so far year to date, the NASDAQ, which is your high growth companies, about 37% of those companies are down 50% from their highs. So your high growth companies that have high valuations, I believe with the rising rates, they're going to get hurt even more. We like drug companies, but we want to make sure we're not going to overpay for them, and also look for drug companies paying a good dividend as well.
Okay, yeah, dividend. There are some people who have the mindset that I'm not going to buy a stock unless it pays dividends. What would you say to that person?
It's a good thing. I'd say about 9 out of 10 companies we hold in the portfolio do pay dividends, but that doesn't mean that every company that doesn't pay a dividend is not a good investment. You've got to dig through the weeds. And before we invest in anything, we spend 10, 15, 20 hours. So we do favor companies with dividends, but don't buy a company just because it pays dividends. Now, a couple good examples of companies that do pay dividends are your financial companies. We think they're going to be great this year. As rates rise, their spread increases, so they can increase their earnings, they can increase the dividends, so we like them. Another one, too, energy companies. We think this year as well, energy companies will do well. I hate to say this, we see oil maybe going above $100 a barrel. That means get used to the norm being $5 a gallon at the pump. But again, if you're investing in those companies, at least it eases the pain a little bit, because you have that. And then also, too, I want to tell people, real estate investment trusts that, again, are good values, should do well this year as well. And some of those pay a 4 to 5% yield, but be careful as always what you're investing in. Oh, and by the way, if you're investing in 401ks, dig a little bit deep to make sure that your 401k investments don't have these high value companies that we have. And there's companies to avoid as well, Jason, that we want to tell people about also.
Okay, now we have talked about this before, and I want to get your take on it, because it is all the rage right now, and I'm talking about cryptocurrency.
Yes, cryptocurrency is one that's been a hot thing. It has been all the rage and so forth. And let's just talk about Bitcoin. It was a high of 67,000, I think, a few months ago. Currently, it's around, I think, 41, 42,000. I'm concerned on that because it is so volatile. And also, too, I want to point out to people that 27% of Bitcoin is owned by 0.01% of the people. So this group, they control a big portion of Bitcoin. If they change their mind and move, and this is what I always hate, the little guy gets burned and doesn't know why, because some big guys that had big portions of Bitcoin change their mind and all of a sudden will drop dramatically. So I still say stay away from Bitcoin, stay away from the cryptos. I know they're very exciting, but you're better off if you want to hold that money and do well long term. Look at your financial companies, look at your food companies, your beverage companies. These are companies that would do well, and I feel very comfortable that they'll be there today, tomorrow, 5 years from now. I can't say the same thing for cryptocurrencies.
Okay, Brent Wilsey, president of Wilsey Asset Management. You've got some good information on your website. What is it again?
We do. And Jason, you always ask me about a workshop. Well, surprise, we have a workshop coming up on January 27th.
Nice. Is it virtual or in person?
It's going to be in person. I'm hoping that things will change by the end of the month. We will see. We'll have to change if that's the case. But we're going forward with it. It's going to be Thursday, January 27th at 6 o'clock in Scripps Ranch. You can go to our website, smartinvesting2000.com. That's smartinvesting2000.com. I'm looking forward to that. I would love to see people again in person, but we'll see how the virus here goes.
All right. Hey, Brent, enjoy the rest of your weekend. Appreciate your time.
You too. Thank you.
Well, if you plan on heading to